All right, so before you spend thousands of dollars buying down your mortgage rate, I want you to answer one question. How long are you actually going to keep that mortgage? Not the house, the mortgage. I'm Jason Turner with Navigator Mortgage Brokers, and this is something I think every home buyer should understand. When buyers compare mortgages, everyone wants the lowest interest rate because they want the lowest payment. But here's the problem. Sometimes that lower rate comes with a pretty significant upfront cost, and those are called discount points. Essentially, you're paying additional money upfront in exchange for a lower interest rate. This is also how some people, or companies rather, with big margins and high rates sell lower rates because they just charge points for them. Okay, so let's go through it. Let's keep the math simple for this exercise. And let's say you're getting the lower rate cost, an additional $5,000, and that lower rate saves you $100 per month on the mortgage payment. That means it takes 50 months or just over 4 years to recover that $5,000. So 5,000 divided by 100 per month, that's the savings, equals 50 months. So if you're going to keep that mortgage for 7 or 10 years, paying those points might make a lot of sense. But what happens is if you sell the house in 3 years or you refinance, then that could cause you to lose money. So what if rates fall and you refinance 2 years from now? You may never reach that point of breaking even, and you just kind of shelled out the money up front really for nothing, right? And here's something people miss. It's not just how long you're going to use the house, or how long you're going to own the house. It's how long you're going to keep the loan. So keeping the loan is the important thing for the math. So you might own that house for 10 years, but refinance the mortgage after 3 or 4. Who knows? Who knows what rates are going to do? And don't let anybody tell you that they know, because they don't. So instead of asking your lender, what's your lowest rate? Ask, what does that rate cost me and how much does it save me each month, and when do I break even? Those are the things you need to keep in mind when you're shopping around for your mortgage, okay? So sometimes paying points is a great financial decision. Sometimes keeping that $5,000 in your bank account is a better move. The low rate isn't always the lowest cost mortgage because you're paying additional closing costs. So if you're buying a home and you're trying to decide whether paying points might make sense, send me your numbers. I'm happy to calculate the break-even point for you and see if that fits your timeline, and you decide what's best for you. So I'm happy to help either way. Hope this is helpful. Have a great day.